Hey everybody, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Folks, Bitcoin right now under 116,000. So we're kind of in no man's land, just consolidating. So at this point, we all have to be patient and let the market do its thing. We know we are still in a macro bull market based on the data, not our feelings and dreams and emotions, but what global liquidity is doing, all the Fibonacci levels, the Elliott wave levels, and much more. Everything is still intact. So we really have to be patient here. I do believe that we're going to bottom sometime this month. We're obviously just past the middle of the month, and then we're going to rally, and that rally could continue into September, then have a strong correction, but we'll have to wait and see how things play out. One thing that Caleb Frenzen, a great analyst who I've had on the podcast, said about what Bitcoin's doing right now. He said Bitcoin is oddly enough in no man's land. If it breaks above the green level, all-time highs, that's bullish. He shared a chart here with those respective levels, and he says if it breaks below the red level, the lower lows, that's bearish because it's an uptrend. I'm bullish and expect that Bitcoin will make new all-time highs soon, but I'm staying objective. So of course, you're going to see people who don't understand markets are going to say, oh, so Tony, you're just telling us that it could go up or it could go down. Well, yeah, we don't have a crystal ball. We're using the data. Rather than use our emotions and get emotional about this stuff, just simply say, hey, look, Bitcoin is literally between the highs and the lows right now. We got to give it more time to give us confirmation as to which direction it wants to go in. That's a very hard thing for many people who are used to just playing the lottery or going to the casino and getting instant outcomes. But with investing, you have to be patient, and then you have to wait sometimes for data to show you the direction, right? This is why I often say when we have a breakout, let's wait for confirmation because the market can fake us out, just like Bitcoin faked us out last week with a move to $124,000, a new all-time high. Then it flash crashed on us, right? So these are the things you have to expect in markets. And, I've been in doing this since 2016. So that's why I often tell you guys, hey, I don't know what's happening here. Here are the scenarios and the probability of which scenario playing out. So I do believe, though, because we are in an uptrend, because we are in a bull market, and we're not far from the top, I think we're going to pick up momentum. I don't think this is going to be like a 30% correction. I could be wrong, but I honestly don't think so. The probability of us having a slight pullback then continuing is stronger. So be patient, guys. And even Ethereum, if you look at the Ethereum chart, it is cooling down. It's currently at $4,371. So ETH was getting a lot of momentum. A lot of the liquidity was going to ETH, and that's very good for the entire altcoin market. But even ETH is cooling down. It was in the overbought zone. So at this point, it's just like chill out and let's find the support level that it's going to bounce on and keep moving up. But one thing's for sure, there's a lot of buying of Ethereum right now. So Ether accumulation heats up. $882 million in ETH snapped up by Bitmine and an unknown whale. So Bitmine is Tom Lee and that publicly traded company that is buying a ton of ETH. They are looking to raise $20 billion to buy Ethereum. So essentially becoming the Michael Saylor strategy of Ethereum. So this is incredible. A lot of buying is happening on the ETF front. A lot of treasury companies are buying. So as stated, this is very bullish. We still got more upside. So that's why these firms are buying and trying to get as much as possible because there's upside. And then they make a lot of money off the arbitrage with their stocks. And we'll see how this all works out in the bear market. Now, ETH does have an advantage because it's proof of stake and you can do DeFi with it. So you can continue to earn even in a bear market when the price is down versus Bitcoin, not so much. So we'll see how this all pans out as the bear market rolls around. So guys, this is a time to maybe step away from the markets a bit because nothing's happening. But once we find the bottom and we start moving, then you really zoom in and pay attention on the daily, right? So don't fret, don't worry, we're still on track. Now, here's some interesting news. The Winklevoss twins Gemini crypto exchange has filed for a NASDAQ listing after a strong bullish debut. So Bullish did an IPO last week, and we're seeing a lot of crypto companies go public. These things happen in a bull market, right, folks? No one does an IPO in a bear market. So we're seeing a lot of crypto companies joining the herd here, trying to go public. So Gemini de Winklevoss founded crypto exchange and custodian has filed to list on NASDAQ under the ticker Gemi, Gemi, revealing steepening losses ahead of its IPO. So they highlighted here some losses, and we know Gemini is a small exchange. They honestly haven't innovated or expanded the way that Coinbase and other exchanges have. So it looks like they're operating at some losses here, but these numbers could easily flip as the bull market heats up, but it's getting very competitive out there, very, very competitive, which is good for us as users and consumers because you have more players in the market. Everybody has to raise their standard, offer cheaper fees, better services, things along those lines. So very interesting that they're looking to do an IPO. Look at this. The S&P 500 and the Dow Jones are in talks to launch tokenized indexes. Of course they are. Folks, when I was telling you back in 2018, 2019 that stock exchanges, banks, financial institutions would offer crypto, here you go. We're seeing every day, week, month, new big institutions are jumping all in. So the S&P Dow Jones indices is exploring partnerships with major exchanges, custodians, and DeFi protocols to launch tokenized versions of its benchmark. So as crypto matures as an asset class and you have all these different financial products, you're going to need the analytics, the reporting, the white glove service, all the things that exist for assets in the TradFi world, right? They're going to be built for crypto. So that is what's happening here. Crypto will eventually become like the stock market in a sense that it becomes like a household thing and is traded by everybody. It's well known. It's going to be discussed in mainstream media. That's what's coming. And of course, they're going to tokenize stocks and all these things on the blockchain. So Stephanie Roten, the firm's director of U.S. equities, told Cointelegraph that the index provider is taking a strategic approach to ensure tokenized S&P products are launched only on platforms that meet high standards for transparency, security, and regulatory compliance. Here is a quote: "By establishing these types of relationships, we hope we can work together to participate in a robust infrastructure that supports the trading and accessibility of tokenized versions of our indexes, ultimately enhancing the investor experience," she said. Very bullish news, guys. Now, look at this. Speaking of tokenization, Centrifuge tops $1 billion of TVL as institutions drive tokenized RWA boom. So Centrifuge joins BlackRock's Biddle and Ondo Finance in the $1 billion RWA club as demand grows for tokenized products. So you're seeing the growth of the tokenized asset markets. Coinbase, Kraken, all these exchanges, Robinhood, they all want to launch tokenized stocks. And we are seeing different companies pop up. Like, I didn't really know much about Centrifuge. I knew about BlackRock, of course, and Ondo. So this is very, very interesting. So Centrifuge's CEO Baji Illuminati attributed the milestone to institutions moving from pilots to real deployments alongside strong on-chain allocator demand. Markets need more than T-bills, Illuminati told Cointelegraph, pointing to JAAA, an on-chain version of the Janus Henderson's AAA-rated collateralized loan obligation investment fund. That's a mouthful. Oh my goodness. As a natural step for institutions seeking higher yields than risk-free rates. So, folks, see the direction the puck is heading in here. We are seeing a lot of growth and maturation in this industry. And guess what? Real estate will be tokenized. Real estate is the world's largest asset class. It will all go on chain. The process of buying and selling a home will be disrupted by blockchain. Intermediaries will be removed. Fees will be cheaper, and it will be a much more transparent, faster, easier process. And Proppy is leading the charge with doing that. Proppy's been around since 2017, folks. They have facilitated over $4 billion in transactions. They're a licensed Web3 pioneer. So they have put deeds on the blockchain. They have created NFTs for properties, and you can buy and sell your house on Proppy. And if you want to accept crypto, you can do that. So if you want to sell your house for Bitcoin or XRP, whatever, you can do that. And they use Coinbase for the crypto escrow service. So Proppy, I am a token holder. I have been since 2018. Yes, that long. And I'm very bullish on this project because I view this as a long-term play. It's going to take time to disrupt this massive real estate industry, but Proppy is ahead of the curve. They are ahead of other competitors, and they've been doing this for a long time, folks. So check them out. Go to proppy.com. Link will be in the description. Now, look at this news. Japan's FSA will approve the country's first yen stablecoin. The JPYC is set to launch as early as this fall. So the token economy is growing. Digital currencies, tokenized assets, cryptocurrencies, digital assets. That is where we're headed, folks. Everything running on the blockchain. I've said it many times. The markets, the economies, and the governments will all run on blockchain rails. You will be using blockchain technology in one way or the other, whether you love it or hate it, whether you're invested or not. It will be the backbone, just like you use the internet now. It will be the backbone of many of these infrastructures. So let me give you the details. Japan's Financial Services Agency is preparing to approve the issuance of a yen-denominated stablecoins as early as this fall, marking the first time the country will allow a domestic fiat-pegged digital currency. Tokyo-based fintech firm JPYC will register as a money transfer business within the month and will lead the rollout. Japanese news outlet the Nihon Kaizai Shimbun reported on Sunday. I probably butchered that, but just so you guys know, JPYC is designed to maintain a fixed value of 1 JPY equals 1 yen, backed by highly liquid assets such as bank deposits and Japanese government bonds. After purchase applications from individuals or corporations, the tokens are issued via bank transfer to digital wallets. Now, there's no details on which blockchains are going to be used, so we'll have to wait and see, folks. It's going to be very revealing to see which blockchains these governments use in building their digital currency and stablecoins and much more. Obviously, some are going to use it for CBDCs as well, but this we're going to have to be vigilant because I do believe that some stablecoins are CBDCs with a different mask on, like a wolf in sheep's clothing, right? So we have to be vigilant to make sure that they're not doing anything fishy here. But nevertheless, nothing is stopping this train. You guys see what's happening here. Governments, the TradFi folks, everybody's getting involved here. Now, speaking of being vigilant, look at this. U.S. Treasury weighs digital ID verification in DeFi to tackle illicit finance. So this is a bit controversial, folks. So the U.S. Department of Treasury is seeking public feedback on how digital identity tools and other emerging technologies could be used to fight illicit finance in crypto markets, with one option being embedding identity checks into decentralized finance smart contracts. The consultation published this week stems from the newly enacted Guiding and Establishing National Innovation for U.S. Stablecoins Act, known as the Genius Act, signed into law in July. The act, which sets out a regulatory framework for payment stablecoin issuers, directs the Treasury to explore new compliance technologies, including applicable programming interfaces, artificial intelligence, digital identity verification, and blockchain monitoring. One of the ideas in the request for comment is the potential for DeFi protocols to integrate digital identity credentials directly into their code. Under this model, a smart contract could automatically verify a user's credential before executing a transaction, effectively building KYC, know your customer, and AML, anti-money laundering safeguards into blockchain infrastructure. So folks, I don't necessarily have an issue with having a digital identity. What I think would be a nice balance is I can control it and release it to who I want. And it is secured by zero knowledge proof technology. So if I want to participate in DeFi and the government saying, okay, in order to participate, you need to give your identity. This is where it gets complicated because I don't necessarily want the government involved in everything I'm doing. Like, why do they need to be in everything? But I understand bad actors are going to do stuff. So I would probably like to have some sort of ZK proof technology in place where that I can release my data, but the government only gets a bit of it. I have to flush this thought out a bit, and I'll probably write an article about it. But we've seen sometimes that the government, they can trample on your rights. So this is where I'm conflicted, right? Because I understand you need to protect people. I understand there are bad actors. You need to stop bad actors. But do you need to be involved in every single DeFi transaction. Maybe there's a threshold, anything above 10,000 or 20,000. I don't know. But if I'm doing something for a few $100, why does the government need to be involved in that, right? So this is where we're going to have to figure it out. And I guess this is good that they're asking for commentary and feedback. And I'll be trying to speak to some people in the industry and see who will be submitting their ideas and get them on the podcast to talk about this, because this is something we do have to discuss and find a balance. Because I understand, once again, government has to stop bad actors, and we don't want bad actors using crypto to do nefarious things. But also, we don't want government to trample our rights, right, and our right to privacy. So this is where it gets tricky, folks. So we'll have to see where it goes. But this is where, again, we got to be vigilant and watch these governments closely. All right, moving ahead, final news item. Norway's sovereign wealth fund boosted Bitcoin exposure by 83% in Q2, Standard Charter says. So you got sovereign wealth funds around the globe investing in crypto. It's incredible. It's amazing how things have changed, and the level of folks who are investing here. So Norges Bank Investment Management increased its Bitcoin equivalent exposure from 6,200 Bitcoin to 11,400 Bitcoin in Q2, according to Standard Charter's Geoffrey Kendrick. The bulk of the position remains in MicroStrategy shares, with a small addition in Metaplanet, Kendrick noted. So they're essentially using the proxy companies. The two biggest companies are MicroStrategy and Metaplanet that have the biggest Bitcoin treasury strategy. And clearly these folks some of them are going the ETF route, buying the actual Bitcoin ETFs. Some are going through the stocks of the treasury companies. So it's just fascinating to see how these things are set up and why these treasury companies are going to continue to do well, because there's not full clarity in every country. The United States hasn't passed market structure yet, right? As an example, the EU has done MiCA, but there are a lot of jurisdictions, like probably Norway, there isn't any crypto legislation in place. So these companies are like, we're not going to go directly, we're going to do indirectly, hold a stock of a company that has Bitcoin on its balance sheet. So I think that's what's happening here, folks. But very interesting that these folks are investing via a proxy, right? All right, folks, that's the news. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button. A great way you can support me in the podcast is by subscribing to my free email newsletter. It's 100% free. Link will be in the description. Check out my book on Amazon. It's available in paperback and digital. And check out my course at mycryptocourse.com. This is a comprehensive course that teaches you every aspect of crypto. If you want to expand your knowledge about this technology and asset class, this is the course for you. Check it out. Go to mycryptocourse.com. Folks, thank you so much for watching and listening. I appreciate you all, and I'll talk to you all later.